Thank you. Thank you, everybody. It's a great pleasure for me to be here. Great pleasure for me to be here. I'm Daniel Brooksbank. I'm the editor of Responsible Investor. I'm a journalist. Responsible Investor is a magazine and website, and we cover responsible investment. What is responsible investment? The word we use is environmental, social, and governance. So that encompasses green investment, social finance, corporate governance, and we write about the major institutional investors in the world: insurance companies, asset managers, pension funds, and the topic here today is banks, sovereign wealth funds, and financial institutions financing the transition to a low-carbon world. I've been covering the investment industry for a long time, for about longer than I care to imagine, and I think the issues around low-carbon, green finance have really taken grip in the last few years. I mean, there is some greenwash out there, but I genuinely think that there are some serious investors globally who are taking these issues very, very seriously. Part of the problem, though, is how to allocate to green finance, how to allocate in a world where a 2-degree world. Bearing in mind that investors are constrained, they have liabilities, they have solvency issues, they have benchmarks, they have beneficiaries, there are regulations. Projects have to be investable. These are some of the issues that I see when I'm writing about this issue. Yes, we know we have to allocate to a low-carbon economy. How do we do it? And I think it's been the theme, certainly of this morning's session, is yes, we have to mobilize green finance. We have to mobilize this, but the issue that I see is how do we move from here, where there are trillions of assets in the global capital markets, and a similarly multi-trillion demand for low-carbon investment. So that's some of the issues we're going to try and get to today, how to mobilize that. So really, for every issue, there are obstacles, obviously, but there are also opportunities. And I think people who get that correct will be onto a winner. Just some background. In terms of sovereign wealth funds, I mean, they've probably been slightly slow to the party, but just quite recently, the International Sovereign Wealth Fund body has launched a study group looking at climate change, so that's very positive. I know for a fact that the global banks, and we've got a bank representative here, are targeting billions of investments in renewable infrastructure, hydro systems, wind power, solar power. So there's that issue. And the institutional investors that really are my constituency are very much looking at portfolio decarbonization. How can they take the carbon risk out of their portfolios? They may have a $50 billion portfolio. How do I take that risk out of my portfolio? And this is probably the first time in human history that we've been able to look into the future and see there is a change coming. How do we respond to that in a prudent, risk-free way? So what is the role of capital markets here? And it's great that we've got some very senior people here to talk about that. The other issue that is front of mind for the people in my sector is the growth of green bonds. And I hope we'll get into that further down the line. I know Morocco has introduced a green bond, but that's really possibly the fastest growing area of interest in our sector, green bonds. The other issue is low carbon indices. Now, the thing about the global institutional asset management market is a reliance, you could say, on indices. Everything is benchmarked against something. Everyone has to look at what their peer group is doing. Everyone has to be able to show that they've beaten the benchmark. Now, if the benchmark is a high carbon benchmark, what's that going to do for low carbon investing? So the last 2, 3, 4 years, people have come up with low carbon indices, and there's been some very serious allocation to low carbon investing. But whether that's just decarbonizing your own portfolio and not allocating to a low carbon portfolio is an open question. The other issue I'd like to raise is this tendency to see all investors as the same. You've got sovereign funds, sovereign wealth funds, banks, financial institutions, by which I take to mean insurance companies, asset managers, and pension funds. Not all of these investors are the same. They have different criteria to invest, different liability structures, or even no liability structures at all. They have, again, beneficiaries. They have all sorts of regulations around them. So I think that's something that this community has to take on board, that not all investors are the same. It's not just one homogeneous group of capital out there. Each sector has its own demands. And I guess my overall challenge to the panel is where I'd really like to get to at the end of the session is a really simple question. Does low carbon mean low returns, low investment returns? I mean, all the time, high carbon investments are returning so well. How can you allocate to low carbon? I think that's really the central issue that I see. So we've got a great panel here to discuss this. And starting on my extreme left here, we have Madame Nezha Hayat, who's the chairman of the Moroccan Securities Commission. Sorry, excuse me, 1 second, when I get my list in order. We have Meriem Mandjra. We have Wang, Myrthe Haase, and Professor Catherine Lubochinsky, if I said that correctly. I will just introduce the speakers now. Nezha Hayat, president of the AMMC, previously with SocGen, Société Générale, I believe, nominated a young global leader by the World Economic Forum a few years ago, perhaps, in 2001, very active in promoting women business leaders and directors. Professor Lubochinsky, next to me, professor of economics and finance at the University of Paris, with an emphasis on strategy and futurism, I see. So very interesting. Also former president of the European Monetary and Finance Forum between 2006 and 2012. Meriem Mandjra is a consultant for the Morocco Sustainable Energy Financing Facility, MORCEF, involved in energy efficiency and consulting, has a background in banking in the United States. Very interesting. Mr. Wang, a research fellow at IDRI, the Institute for Sustainable Development and International Relations, the Paris think tank. He's, amongst many other things, is the editor of the Climate Policy Journal, an expert on China, green finance. Myrthe Haase, Sustainability Risk Officer at ABN AMRO, the Dutch bank, previously worked with NGOs. So a really interesting panel, and I hope we can drill into this subject very well. But I'd open really with you, Madame Hayat. Really, what's the role here for someone like yourself as a regulator to channel low carbon finance? Need to press the.
Okay, thank you. Well, first, let me express my real pleasure to be here with you at Forum MEDays, and I'm happy to be here, and I thank Brahim Fassiferi, the founder of this MEDays, which are today an important event in the region. Also, just want to comment, today I'm heading the regulator of capital markets in Morocco. It's an independent authority today, not a commission. And we are also not only responsible for controlling and regulating, but also making sure that we can encourage innovation within capital markets. And in this, today the challenge is how can capital markets finance the decarbonation of the economy, and what is the role of a regulator for capital markets. As you said, Daniel, I mean, stimulating low carbon economic growth requires long-term funding, and requires also enhanced channels and the specific, above all, adequate, predictable transparency and tools for investors. These investors that are your figures were impressive, and we can see even in this, although it's very new in Morocco, we can see that the ability of this green project to attract new long-term investors. So today we see that capital markets have to play a role, an important role, to enable the reallocation of capital towards green projects. But exactly what do we have to do? The role of all regulators is to develop the frameworks that can help the markets address these new risks relating to the transition and adjust it efficiently. What have we done? If we, as an example, what have we done in Morocco, especially this year with COP22? We had to look at new green bond issues. Today we have authorized already four issuers to go to the market. And our duty was to come out with a clear guidance of procedures at the same time for the issuers, but also for investors to understand what kind of information they would get and what are the requirements for issuers. And this is why we have worked with the support of IFC and launched a green bond guide. We then find out that it was the first one ever launched in Africa. You know, Africa is becoming an important continent for green bonds. And today Morocco has, by having launched four green bonds, I think is the most advanced today in Africa. So we think that the regulator has to promote by explaining clearly what we mean by green project, what are the requirements in terms of information to be released, and we need to be also regularly updated, and also the procedures. In our case, we have decided that it would be an independent evaluator that would state the greening of the projects to be financed, and not the capital markets authority. So that's this is what we've done in terms of green bonds. But if you want, I can also, if I still have some time before. How we have addressed the financial market as a whole, the issue of climate-related projects, as there is a clear indication orientation, first by His Majesty and then the government. We have worked for 6 months, banks, insurance companies, all capital markets professionals, the three regulators, together with the Minister of Finance and the committee of the COP22, on a roadmap that we have announced and released during COP22, where we we have taken very clear commitments and actions to promote green financing and the financing of sustainable development, not only in Morocco, but also how we can make our African neighbors benefit from our experience.
How important is disclosure and transparency, from your point of view?
I think it's the key. It's the key issue. First, we have to have a common understanding of what green is. First, then we have to make sure. For instance, when a bank issues a green bond, this money that comes from investors is normally used to finance or refinance green projects. So first, we have to make sure that we have a common understanding of what green is, that there is an internal procedures, and maybe you will be the person from Ibn Ambo will be confirming that we have asked for an internal clear procedure to select these projects and how to follow them. And what is more important is that we have to make sure to decide what kind of information should be given to investors so that they can decide about this investment and they can follow it. So I think it's the real difference about normal ordinary bonds is the information, and the problem is that we still don't have enough information that can be measurable. We in terms of impact, environmental impact, for instance. So I think that would clearly be I think it's the challenge for the markets, and I think that this I would be very interested in reading of what is this committee under the Stability Board is releasing about the kind of communication that also private sector is ready to give.
For people who don't know, the Financial Stability Board, which is it's a very high-level body chaired by Mark Carney, who's the chairman, the governor of the Bank of England. He's put in place, I think it's called the Task Force for Climate-Related Financial Disclosures, the TCFD, which is very high-level international panel, which is putting together a set of recommendations, which are actually due next week, and that's been consulting on. And I think everyone's really looking to that to set really the framework for how some of this disclosure takes place. So that could really be a pivotal point for everybody in the market, for corporates and investors to how do we disclose this thing? We have a common set of common language.
And maybe just it is important that we all share the same level of information to be disclosed all over the world. We are in a new, it's especially that we have new investors today that might not, haven't looked, for instance, at Moroccan capital markets up to now, but will be looking when it comes to finance green projects. So it's very important that we make sure that our requirements meet the international standard or the global standards today of these regarding these projects.
Yes. Professor, I was going to ask you a question, but I don't know where to start.
I could further insist on the Financial Stability Board report that's going to come out on December 14. They are indeed insisting on an efficient disclosure framework, which will focus on the governance of company, both from the board perspective and from the management perspective, how they assess climate risk. And they will also look at the strategy implemented by corporation, that is the impact of risk on short or medium term or long term strategy for the company, and what's the financial planning. So we'll have government strategy, risk management also will be a third disclosure. And so how do they assess the risk? How do they integrate it into the organization overall risk management? And finally, what metrics and targets they're going to use. So all this will have to be disclosed. And because it's going to be an international framework, I guess we'll have the level playing field that Nezha was mentioning a few minutes earlier. So, but I first, now let's go back to my introduction. I would indeed like to thank very much the Institut Amadeus for inviting me here and congratulate them on their title. I think Fragmentation and Durability is a fantastic title nowadays. We're seeing less and less multilateral treaties and more bilateral treaties. We see the Brits getting out of the European Union. We have the Brexit. I'm not looking at you, no offense. No, that's okay. And so, I mean, we have a major issue there on fragmentation. But the interesting idea is that fragmentation is hitting all the other policies. If you look, for instance, fiscal policies, you see that the basic principle of non-specific allocation of a tax receipts to spending is forgotten and gone. I mean, now governments, every time they want to finance something new, they levy a new tax. So we have a tax on this, a tax on that. We have 360 different taxes in France. Yeah, so this is not efficient, definitely not efficient. And it's the same for finance. You know, we have finance that focuses on this issue, that issues, for until, I would say, COP21 in Paris last year, the fashion was, we have to finance infrastructure. Everybody was talking about infrastructure. Now the fashion has moved to low carbon or climate or green finance, whatever you call it. It's more or less the same thing. So I would just remind you that I'm not giving the opinion of my employers, nor even mine sometimes. It's just I've decided to be a bit provocative and give you a vision through a financial prism. So a bit cynical sometimes, but that's okay. So the basic economic principle we know is to optimal allocation of rare resources. Okay, so problem, what is optimal? Does the market know better than the government? That's one question. And the answer depends, well, that's the usual answer from an economist, it depends. The answer depends whether you're short-term or long-term oriented. And here we have one of the critical issues with financing the transition towards a low carbon economy is we have a conflict of interest between short-term and long-term objectives. So, for instance, we know that financial flows are supposed to go to the higher risk-return adjusted ratio. Fine. But markets are concerned only by monetary returns in the short run. So, whereas for the climate issues, we have to include a real long-term cost-benefit analysis, which is not done. If you look at, you know, and it all comes down to the securitization of capitalism. So this has increased the short-termism that you see. You know, company CEOs are always looking all day long on the return on equity of their corporate, and everything goes like this. It's all short-term oriented. So how do we shift all these short-term behaviors, both by investors and issuers, to a more long-term strategy? That's, I think, one of the key things. Now, when you look at your return risk adjusted ratio, What you need in order to take all your decision is a price indicator. And prices are the main indicator on which all decisions are made. That's what we learn in economy, Econ 1, right? Well, the problem is carbon still doesn't have a proper price. We haven't really priced the carbon, so corporations don't integrate the cost of their carbon production. So the polluter is not the payer. So where are the incentives there to decrease the carbon emission? That's a problem, right? Now, we could also mention that another issue nowadays is the low interest rate environment. So from a borrower perspective, it's the right time to borrow. So we could say, well, go ahead, borrow all you can to finance green investments, right? And you'll find investors because they will invest in bonds that give a slightly higher yield in corporate bonds than government bonds. On the other hand, the studies that have been done up to now show that green bonds compared to similar other bonds give a return of 20 basis points lower. So that might put back some of the investors unless they're very much green oriented. Right.
It is interesting though. We cover the green bond area quite deeply, and every green bond that comes out that's truly green is massively oversubscribed. So it shows that there's an investor demand for that kind of issue. It's almost regardless of the yield picture. So that's
well, any other bond, corporate bond, is usually overly subscribed nowadays because corporate bonds have a higher yield than government bonds. So the question is, are they more oversubscribed, those green bonds, than any regular good corporate bond? I'm not sure.
I'm not sure.
Right? So we don't know. Okay, so, and I also had picked up a few numbers to make you realize what they're, how big the effort has to be made. Now, in Copenhagen 2009, it was decided that we should put together about $100 billion a year to finance that climate transition. Well, $100 billion is more or less Morocco's GDP, right? So it could look a big amount from Morocco's perspective. But if you look at the total amount of fines paid by banks, financial institutions since the crisis for misbehaving, right? So LIBOR manipulation, exchange rate manipulation, embargo, etc. It is more than $100 billion. So this could have been invested in a climate fund and be usefully invested, but I don't know what they've done with the money. And you have to compare this to the overall stock of bonds, which is about $100,000 billion. So 100 is not much compared to 100,000, but still it can be a big number, right?
Okay, can I stop you there? That would obviously be too sensible to put those fines into a climate fund. And Meriem, I'd like to turn to you now. This is Morsef is very much a project on the ground. I'm very interested to hear your thoughts of, you can talk the theory and the macro. Talk us through what you're doing.
Thank you. I'm very happy to be here today. Morsef is essentially a financing tool that was launched in 2015 by EBRD, AFD, KfW, and EIB to essentially promote sustainable energy investments in Morocco of the private sector, private companies' investments. Before that, I'd like to just give a bit of a context of what a CEF program is. So CEFs are Sustainable Energy Financing Facilities, launched by the EBRD in 2006 to basically work with partnered financial institutions in the countries of operations of the EBRD in order to help those local banks develop sustainable financing solutions for their clients. So essentially, the EBRD lends to the local banks, which in turn on-lend to their clients to invest in energy efficiency projects or renewable energy projects. I'd like to also say that the other development banks have their own programs in sustainable energy financing. But this program, the CEF program, is essentially very interesting and had lots of success for 3 reasons. One, it provides dedicated financing to companies, SMEs, which really don't know how to invest in energy efficiency, don't have local banks that have available dedicated leases or loans for those types of investments because they didn't know how to lend on energy efficiency. So that's one, so dedicated financing. 2 is the technical assistance, which is a key component of investing in sustainable energy, is understanding the expertise. How do you measure savings? How do you invest in what type of equipments? The availability of after-sales maintenance, all those components that are key to make the project successful in maintaining the returns and talking about the profitability of the project. And the third piece is the incentive program that was from the European Union, if you will, grants. I'll explain that specifically. Just to give you a bit of a perspective for the CEF programs, 3.5 billion euros financed in 24 countries, Eastern Europe, Russia, Turkey, 6 million ton equivalent CO2 of emissions reduction per year, 100 partner financial institutions. So a very successful program over 10 years before they launched it in Morocco. Now, you probably are curious, how does it work in Morocco? So it's a 110 million euro program with 2 partner financial institutions, Banque Populaire and BMCE Bank. And they're working essentially with private companies. To date, we have closed over 20 million euro in loans with 45 projects. And there is about 25 million euro additional in the pipeline. So it's showing really good results in terms of energy savings. And what's really interesting is the payback periods, which to go back to your point about profitability, they're very reasonable. Less than 6 years for energy efficiency, less than 8 years for renewable energy. So we can talk later about the benefits to the companies. But clearly, we've seen companies interested in investing differently, because what MORCEF's technical assistance is doing, it is essentially helping companies better invest in equipment that they would not normally invest in by guiding their choices towards more efficient equipment. Yes, you're going to buy a boiler, you're going to buy a water heater, but why not go to the better equipment, to better quality, more savings, and in turn, you get less expenses. Obviously, with the subsidies that are going away in Morocco, if they don't invest better, it's going to impact their returns, and so on and so forth. So I think from a company's perspective, this is a very clearly a benefit. Before MORCEF, we didn't have dedicated financing, and we could have had laws, regulations, but without the financing tools, how can you really invest? And I think with this turnkey approach, financing plus technical assistance plus incentive of 10% of loan amount, which can be pretty interesting. On a loan that's 5 million euros, it can go up to 500,000 euros. 500,000, no, yeah, that's what.
What's the role, you talk about the development banks, what's the role of the development banks in this, in your project and sort of more generally?
So clearly the package, understanding how it's been done in different countries, the development banks have experience in sustainable energy initiatives, and I believe that their role and their goal is to promote competitiveness, innovation, energy security, and help develop the countries where they operate for sustainability. The role also was on the technical assistance, engaging with the consultants that were basically hired to implement the program, because the key here is the implementation, and I'm part of the implementation team, but the key is creating a market, creating a product, marketing that product, evaluating the projects, because again, in the banks, they don't have that expertise, the local banks. So the role of the development banks is to help with the capacity building, create a new line of business so that when this program ends, they can continue with their own product. That's not the CEF product, that's going to be something else, so that it becomes a sustainable financing solution, not something that's just for this program. So the role is to really create a market in the long run, help with the training and also awareness raising, demonstrating that it works with actual projects, case studies.
Yeah, and I think it was the development banks who incubated very much the green bond back almost 10 years ago. But what's your take on the development banks?
No, I think it's the role of development banks to, foster on projects that are food-oriented, energy-saving, etc., etc. But it always has been the goal. So I would ask you, where's the shift? Where's the shift? It always has been that. You want to do a cost efficiency strategy, sustainable. I mean, nobody's going to say, I'm investing in this. I know it won't work in a couple of years' time, but it's okay. So what's the new behavior?
Well, I think the results speak. Like I said, before that, we didn't really have any energy efficiency financing in Morocco. And today, we have a demand from SMEs in all sectors who want to invest with an energy efficiency component. And this package is really creating a new business, a new line of business in banking. And it's very down to earth, so to speak, because they're SMEs in different sectors, agribusiness, transport, and they just have a tool with their local bank, because I think that's the key here. It's the local bank that lends to the SMEs. So that's the key, and that partnership, I think, is creating a change in really how things are done. And today we see the demand that continues for this product. And so, like I said, 45 million between the pipe and the portfolio, euros, 20% energy saving to 90% energy savings across the different deals. It goes from a couple 100,000 dirhams to several million dirhams. It's measurable savings, renewable energy, CO2 emissions reduction. There's reporting that's done. So I honestly, because I've been in energy efficiency for the past 8 years as a consultant, and I was doing energy audits for my clients, and those energy audits report, they end up in drawers. Nobody's using them because there's no financing available, no incentive, no laws. No obligation. And so when you come with a solution that provides you the keys to making that step and not being concerned about, the expertise, am I really going to be guaranteed those savings that I'm being promised? Am I getting a...
Could I ask you just one thing? How does it compare to what happened with the 2 oil shocks we had in the 70s, where after these oil shocks, everybody did some energy savings investments in order to decrease? I mean, wasn't that the same thing?
I was not born then. No,
okay. No,
no.
Okay. Moving on. Jin, China. I mean, no discussion of low carbon, green financing really can avoid talking about China. It's amazing the development there. I mean, you're very close to it. Can you talk us through from your point of view and tell us, tell the audience really what's going on from your perspective?
So thank you very much. I think I talked in French yesterday's panel, so I'm allowed to speak English today and share some of my point of views on actually what is going on in China. Why, as you may see, China has become the #1 in terms of green bonds at global level. So it's the biggest green bond market today in China, and why the green finance has achieved many concrete development marked by project policies implementations. And why China seems to decided to conduct all this low carbon or green transition. So generally, China has put forward at two degrees. At the international level, as you may see, this year's Chinese presidency of the G20 meeting, I think this is for the first time the issue of green finance was put as the single issue in the agenda comparing to previous G20 meetings. And China committed to the Paris Agreement in terms of different emissions reduction targets and low carbon transitions. And at domestic, both at the national and local policy making issue, you can observe. I'm not going to enter into details on this one, but you can really see thousands. I'm not exaggerating. Thousands of policies supporting low carbon and energy transition, in particular climate and green finance. And not only the issue of policy designing is important, but also the policy implementation is very, very important. So that's why, for example, in terms of this governance, the National Green Finance Committee was created actually last year in China. The president is the chief economist of the Central Bank of China, People's Bank of China. And most of commercial banks, financial institutions, private enterprise insurance companies, and think tanks, enterprises, they become member of this committee. Actually, I'm going to give you a number. I'll give you two numbers. So the total, first is the green bonds I mentioned. So the total green bonds issued in China, the total value is $20 billion only in 1 year. So if you look back to early 2013, there was nothing. There was zero in terms of green bond issuance publication. Well, by now, the number what I got is at the end of October this year, total value of issued green bonds reached to $20 billion. So that's the total issue. And another issue number I'm going to give you is the total financial assets and not only the green financial asset, but the total assets. Just to give you give you an idea of the scale of this Green Finance Committee, what it represents. The total financial asset under the management of members of this National Green Finance Committee is 15 trillion euros. So 15 trillion euros. That's more than China's total GDP in this year. So as you may see, this committee actually accompanies the implementation of green finance policies. So not only this committee leads the design and implementation of policies, but they also they have special task forces led by different experts on the implementation at the local level for local governments, for enterprises. So it's during this process they understand better barriers, opportunities, and then this feeds back to the design of green finance policy. That's why you may see, I'm not saying this is only because the creation of this committee, but this committee did contribute a lot, for example, to the fact that China today is the biggest green bond issuers in the world. I have no doubt in future China will continue to lead this way in the coming years. So that's, I think only by engaging capital market, that's what I'm seeing, capital market. So that's why you can see concrete actions are being pushed forward, because it's good to have public policies. It's good to have this willingness from China's president and from the central government level. But more concretely, what you can really push forward is not only use the public money, but the engagement of capital sector, so financial sector. So this is basically, this is the general engagement of financial sector, both public and private sector in China, on track in this low carbon green transition. Because what is important, what we can see from the records, that these financial institutions, they did earn money from this transition. So that's what you can observe from data in China. But I'm not sure if all of the data is transparent. But what I can reassure you here, since I'm part of associate to this Green Finance Committee, is that both public and private financial institutions, they earn money from this low carbon transition at domestic in China. I'm going to be very quick to the second point, is that actually, if the general message is the things are moving forward quite quickly and with concrete items, another issue is that, this is also my personal idea, this should not be kept only inside China. I mean, what China has been achieved, not only the general economic development, but in particular this green finance policy and implementation issue should be further conducted at the international level. I mean, to exchange with other partners, both developed and developing countries, American authorities and the private sectors. I think we should conduct more exchange and dialogues and try to see what we have achieved in China could be replicated, or at least could be contributive to green finance or general green transitions in other countries. So that's basically my point on that.
There was a lot of momentum that came out of the G20, China, the chairmanship of the G20 and the green climate. Is that same momentum going to carry forward into the German presidency of the G20, which I think has started just this month? What's your take on that?
Well, I'm personally engaged in the T20 issue, the think tank 20, which is created to accompany the G20 meeting conferences. So last year I participated in several important conferences of the T20 in China, and I think what is the key message that the Chinese presidency wants to send to the world is that it seems that China wants to change the nature of the G20, because one of the key messages the President Xi Jinping said and repeated during China's presidency is that we wish that G20 is going to be an action-led platform, but not only an idea exchange and not only a form of club. So I think this is basically this fits well to the Chinese philosophy based on concrete actions, and based on concrete actions we can observe if it's going to work or not. So it's good to have this ex-ante assessment. Analysis is good, but the Chinese philosophy is more on the exposed assessment. That's why you see China implemented carbon market, the carbon emission trading systems, and many pilot programs and projects. It's only after the implementation, observation, and assessment of these pilot projects, then you can draw a conclusion if it could be applied at national-wide, etc. But I'm not sure if this kind of wish or willingness from the Chinese government side could be carried forward in the coming G20 meetings. But I think what I did see as influence is the issue of green finance, green issues. So after the agenda organization from the Chinese presidency, we can see from the German in part the green finance is has remained its important place.
Great. Myrthe, I would just turn to you from ABN AMRO. From your perspective, a bank allocating capital in this area. Can you talk us through some of your experiences and how you're approaching this? Green bonds obviously came up.
Sure. For those of you who don't know ABN AMRO, I'll explain a bit about what we are. We are primarily a retail bank, and we have commercial activities. So, because we're such a bank, about 3/3 of our loan book is related to real estate. Private individuals owning a home, but also commercial companies having their offices. And if you know that about 25 to 40% of the greenhouse gas emissions relate to the built environment, that's where our impact is. So for real estate, we have set quite ambitious goals. So in 2017, 30% of our real estate portfolio needs to have an A label. So that's the most energy efficient label that we have. We also want to transform 300,000 square meters of real estate to make them make a level jump. So, and we have 1 billion euros set aside for that. So that's what we do for our real estate loans, but also we have, of course, loans for companies active in a range of sectors, for example, agriculture, manufacturing, transportation, energy, of course, you name it. So what we do for each of those sectors, which we qualify as high risk from a sustainability perspective, we have put requirements. So we want our clients to meet those requirements. If they cannot meet them, either we engage and set a time plan for, okay, so in 2 years you need to meet the requirements. And if they're, really laggers, we say, well, sadly, we cannot offer you this loan. Is it good enough? I don't know. Sometimes I think we're doing quite a good job, and I'm quite pleased with what we are achieving. On the other hand, I think the speed in which we are transforming towards that low carbon economy is not, sometimes I want it to be, well, more speedy. So yeah, that's more or less what we do.
Can you demonstrate impact? I mean, if I can say, is there a certain deal you've done or a certain loan you've made where you can show there's been a climate change impact, direct impact?
Yes. What we've done is we have also issued green bonds. So the first issuance of green bonds was about 500 million euros. It was, as you said, oversigned immediately. So that was a big stimulation to do another issuance. And what we found, what was really interesting, that we really broadened our investor base. So for the first one, the London actors bought the bonds, but for the second one, the really dark green Nordic investors bought the bonds. And for this, I think the annual greenhouse gas avoided emission is 900 tons. If you see the whole picture, it's not a lot. I think you would definitely agree with me. Then again, it is working towards. But what I also want to stress, and I think from my perspective, that is maybe even more important. It's not what we do on the top, but also what we won't do at the bottom. So we don't finance new coal-fired plants. We don't finance new coal mines. We also don't finance any activity that leads to deforestation. And we also don't finance if peat gets destroyed, because peat can be a large emitter of methane, of greenhouse gases. So that's what you also need to think about, what you don't do.
Yeah. Okay, we're running short of time, I think. Are there any questions from the audience? I have one there, the man in the blue. Please say your name and try and keep the question brief if you can.
Hello, my name is Myrthe. I'm a second-year master's degree student in financial engineering at EMCGI Business School in Tanger. I have some few questions. My first question is to all of you all. From the first of this conference, we are talking about green bonds, investments, but there is a crucial question. Why do we need the green bonds? Why do we need them? Because we have a classic bond market. Can these projects finance in this classic bond market? Or it's just a tendency to dynamize the bond market? And the second question is what are the techniques that are we going to use to measure the risk of these bonds? And the other question is to Madame Madam Hayat, the president of the IMMC Morocco. Madam Hayat, we have a question about our stock market here in Morocco. We have a lazy market, lazy stock market in Morocco. We have 76 securities. I have one after in the introduction of Massa Maroc. Madam Hayat, what are you studying to dynamize our capital markets? Because like we see, our markets is so secure. We need to have some volatility. We have to have some risk to make.
I think you made your point. I think you made your point. I mean, that's probably off topic, that one, but. That's off topic, but I appreciate that. I mean, it's probably an interesting question, but the first question really is why green bonds? I think that isn't a bad question. I mean, can you handle that question?
Just a minute. I could just have
no.
Question just to Madame Hayat. In Morocco we're developing the exportation market.
I think you've made your point.
Yes. Okay.
And. Thank you, I appreciate that, but this is about green finance, so if you can just address that question. Thanks very much. About why green bonds?
Well, first, because I think they are green investors. I mean, they simply are investors that are interested in investing in these green projects. You are right, green bonds are ordinary bonds, but with the purpose of financing special investments, like, for instance, production of renewable energy. You know that Morocco is one of the most advanced country with this ambition to produce around 52% of its energy through renewable energy by 230, okay? Projects to finance also projects improving energy efficiency, sustainable waste treatment, and so on. And they are investors that who are willing, not only local, but foreign investors, which money is dedicated to this green investment. So they want to make sure that their money is used to these investments and not others. I think that could be an answer.
Do you have an answer?
Well, I could say that by all times, through history, which is important, finance, stocks and bonds have always financed technological revolutions. So we could say that this climate change is the next revolution, and finance is also going to do the job. The question is, can you accelerate and try to avoid abuses? So one way of doing that is labeling green bonds, where you check where the proceeds of the bonds are going to go, okay? Now, and some investors do like to have a green flavor, yeah? So you can see asset managers marketing on the fact that they have green funds. You can see bond issuers saying, we're issuing green bonds, we're financing good stuff for the economy. So lots of it has to do with marketing. But I mean, it can be useful. Now remember, keep in mind, in France we have this NGO that awards a prize every year called the Pinocchio Prize. Yeah, Pinocchio, the liar with the nose. Well, some banks, I won't do naming, but some, if you go on the site, you'll find them. But some banks that have marketed their green bonds issuance and green bond participation and the fact they would not finance this, they were attributed the Pinocchio Prize because they're not saying what they're still financing, which is enormous compared to the few green bonds they've issued. So I think we're still, to be fair, we're still at the beginning. Lots has to do with marketing, but it is overall a good trend. I mean, it can't be a bad trend. But some of the stuff will have to be financed. I mean, you're nice not to finance any nuclear plant. That would be a problem for France, you see, because half our electricity is produced by nuclear plant. So I hope French banks will still finance them.
France is, in fact, planning to be, I think, the first sovereign state to issue a green bond. That'll be interesting. That is quite interesting. And there's also the element of you diversify your investor base, I believe. And you possibly get a different type of investor as well. I don't know. That's what I'm hearing. Myrthe.
Can I quickly react on the marketing thing? Because yes, of course, there is a marketing aspect in it. But I do want to make clear that the green bonds, actually the ones we are issuing, are really verified and certified. So that part is not marketing.
No, what I marketing is just the amount they do compared to financing the rest of the economy. The green bonds, labeled green, are supposedly double-checked on what they finance. So I'm not saying that.
So, do you mind if I answer the question, which is not regarding capital markets and Casablanca Stock Exchange? Well, first, we do not have what you said, a lazy market. We have the second capitalization stock exchange by capitalization in Africa. But you are right, we have only 76 listed companies, and this is exactly so. Today, there is a strategy, there's a whole plan to adapt our capital markets to the needs of our corporates and of our enterprises. And one of these measures will be to adapt our market to SMEs. And there have been major changes in the law of Casablanca Stock Exchange. We will be having different compartments in the market. One will be dedicated to SMEs to allow more small and medium companies come to the market. There will be another compartment dedicated to qualified investors that will be able to welcome highly risked. So the idea is not to avoid risk. The idea is to understand what are the risks, and maybe there are some risks that can only be taken by qualified investors, and so on. There are many measures that will be taking place in the hopefully next 2 years, and that will help dynamize the market. And I think that all the actions we are committed to, both to integrate our market within within the region and African capital markets, but also to respond to that new investments, green investment, will also contribute to a new dynamic of our capital markets.
Thanks very much. I think one more question. Please state your name, affiliation, and keep one question, please.
Yeah. Hey, I'm Mohammed. I'm a lawyer. So I think that the debate about green bonds, it's a real debate. It is really a good cause or just a greenwash. So I think that I read the guide prepared by the Moroccan markets, and I think that principles which allows banks to decide for themselves what it is and isn't green do not exactly inspire confidence sometimes. And also the conflict of interest can arise if services provided in the green bond markets assume more than one role. The question is from Mrs. Hayat and Mrs. Hayes, because you are in the banking sector, I guess. Also, my second question, very quickly, there is a I think this is disproportionate bias surrounding green bonds. How to encourage really Moroccan investors to allocate money in green projects, because it is not sort of trend, but because they see a real opportunity in this. Okay, thank you.
Okay, let's just wrap up. Do you want to respond to that question, Myrthe? I suppose.
I didn't really get your question. Could
essentially greenwash.
Yeah, greenwash. Also, if also the banking sector is allowing to decide if it is green or not, because they will assume in more than role, giving advice and choosing the partners. So sometimes that will arise conflicts of interests.
Do you want to?
Shall I?
Yeah, please do.
A conflict of interest for the green bonds, as I said, they are certified and verified by another separate party. So I wouldn't see a conflict of interest there. But are there conflict of interest within the bank sometimes? Yes. Yes, I wouldn't be lying if I would say no. The bank is not one entity. Me, myself, I work for sustainable banking. And of course, the path I was talking about and the speed I want to go to that low carbon economy, my speed is different from a banker which finances big ships. And yeah, so there is, of course, within the bank sometimes a conflict of interest. Then again, I am quite optimistic. I think the idea of taking into account sustainability aspects, not only carbon, but also, in the broad sense, taking into account that those sustainability aspects when you finance a company has really sunken in the bank. Because what we see is that companies who do not take into account sustainability aspects, they are just more risky than others. They get fined, and so you don't want to be involved with those companies as a bank. But to answer your question, yes, sometimes there are conflict of interest, yeah.
One more question.
Thanks. So it's the last one. So I'm Mustafa Mukas. I'm an advisor on climate finance for COP22. We have been working all year to create public-private partnership and global coalitions to increase climate investment flows to Africa. So with private investors, we believe that we will never reach the threshold that is needed actually for investment in Africa on clean energy and also on the adaptation side. The question is, what do you see as a role for sovereign funds, so globally? And the other part of the question is, what do you need as private investors to scale up your funding in Africa, mainly? Thanks.
Yeah, that's a really great question. Catherine, do you want to tackle that very briefly?
The specificity of sovereign funds is that they have the long-term horizon, which doesn't conflict with usual regular investors that have a short-term view. So they can take into account the long-term risks. And I think we haven't had time enough. Maybe I should have spoken more about the risk. Once you assess the risk, measure it, and take into account then the return risk adjusted ratio, then everything is changed, and you see that all the climate related investments have a higher return risk adjustment ratio. As long as we haven't assessed properly the risk of climate change in monetary terms, then it's difficult to assess this ratio, and it's not a clear indicator for investors. And one of the things the Financial Stability Board Task Force will do is make those corporations measure and assess the climate-related risk. And so we have a new return risk-adjusted ratio that'll be more significant. I think that'll be the way forward.
But this issue of scale, how do you scale it up?
What do you mean, how do you scale it up?
How do you... I think that's one of the questions you were asking. How do you scale the finance up? I mean, each individual project is relatively small. A major sovereign fund is huge. How can you match that up? We're talking about
big corporations are huge. I mean, small finance. I mean, SMEs are one thing, and then big corporations are another. And I think they don't work the same way. When you talk about financial flows, the huge, the billions, the hundreds of billions, they go to big corporations, right? So that will be done by integrating the risk component. For instance, insurance companies are going to be bankrupt if they do nothing, because they're going to have huge costs because of property disasters, etc. They're going to have cost if people sue them because not being properly insured, and litigation costs can be enormous. So these potential costs, once taken into account, make it worthwhile for investors to turn toward climate-oriented projects. But that's financial markets, and that's how they can be moved around with, of course, the government's implication, making new laws and making it compulsory to take into account that risk. For SMEs, I think the problem is totally different and was well spoken about earlier on. It's not the same rationale.
How would you answer your own question? No, you man from COP22.
So for me, actually, it's a matter of risk mitigation. So, and you spoke on the risk, and it's a matter of innovation. So, how can we create innovative mechanisms on the financial market side? So, by integrating the climate risk and carbon risk as well in the portfolio of investors, and on the other side, on the micro side, is the risk mechanism, very simple, and that we have already. That we can use to support SMEs and also to support projects. And also there is something that is, there are two worlds out there that never speak together, the public donors and private sector, and maybe just helping them talk together and find ways to work is also one of the solutions.
Okay, it's a great thought to end this session on. I've really enjoyed it. I hope you have. I'd like to thank all the panelists, and I'd like you to thank the panelists in a normal way. Thank you.